right, well, I guess we should get this started. So thanks for showing up, on time. If some of the people come in, that's okay. We should be having this recorded, and we'll upload this onto YouTube, Facebook channel, and what have you. The whole purpose of today, and I'm going to make the assumption, whether it's correct or not, I'm going to make the assumption that nobody knows anything about Forex. And I'm going to take you slowly through the steps of that. And by the end of this, we should have a fairly good concept, a high-level overview of what Forex is, and then the methodology of how we trade, why we trade, and then getting into some of the specifics of how you actually make those trades within that, okay? I'm going to be walking around my room because I can't just sit and talk. So if I miss the question that you have, I'll get to it. I'm fading in and out. Okay. Is this better here or no? Okay. No, okay. Okay, that's good. All right. So, all right. I see why I didn't have my phone on speakerphone. I'm calling in so I can wander around. All right. So Forex is the foreign exchange market of currencies. So way back, the currency exchange has been around forever since man decided to, hey, here's 50 goats in exchange for 30 silver, or whatever the case may be. There's always been some type of relevance to it. Governments, banks, they were a large part of what happens within the currency market, okay? In 1997, it was made available to the retail public. So people like you and me, we were able to go on, get on board, and participate within this market. There's no other market that has so much liquidity within it. What I mean, there's just so much cash flow. It's a $3 to $4 trillion a day business. So I mean, if you want to just think about that, right? So think about $1 million, and 1,000 million is what? It's like a billion, right? And then 1,000 billion is a trillion. And now there's 3 to 4 of those components within that. I mean, there's just so much money. So it's an incredible opportunity for anybody to dip their toe into that and profit from. All the same while it is a market. The market goes up and down. So people also have an opportunity to dip their toe into the water and potentially lose money. So the objective is to create what's called an edge. Okay, as money is moving up and down, you want to look for probabilities within the market, strategies within the market that allow you to create an edge. And that edge is then inherently the profit that you would get. Like, for instance, if you go to a casino and you play blackjack, the house always wins. How do you create the edge? Well, you can count cards. You can use Kelly criterion for betting or whatever the case might be to try to marginalize that edge it into your favor where you can then stand a profit. All right. Now, with currency, there's a value that a lot of traders and investors in the Forex world utilize, okay? It's called a pip. A pip, think of a pip almost like a share. Like if you're going to go buy a share of Netflix, I mean, that's probably valued at like $300 right now, okay? So a pip is very similar to a share. The difference is you get to decide the value of that individual pip, okay? A pip is a fraction of a penny, all the way to the tenth, because if the dollar raises to $1.01, like $1 and a penny versus like the euro, for instance, how can we stand a profit on that? There's little microscopic movements throughout the day. So a lot of times when you see these quotations, you're going to see like 1.50023. So we're trading tenths and hundredths of pennies. Okay. Now what allows us to maintain a profit on that is this concept called leverage. All right. Leverage is where if I put up $1, I can then enter into the market with as much as $1,000. Okay, so I put in $1 and I can trade that. It's the broker that is backing that money, and so therefore, then if I move up a couple pips and I'm trading $1 a pip off my single dollar, I can do that. Likewise, the risk is very heavy as the farther you have yourself leveraged. So I strongly recommend very low leverage. Okay, so if you put in $1 into the market, you really don't want that dollar to be any more at most $100. And the reason being is because if this moves against you, you could very quickly lose your capital. Last week was the perfect example of why high leverage. Let me just pause. Does everybody understand the concepts that I'm talking about? Does leverage make sense? Does pips make sense at this point? Okay. That's good. All right. So last week, Switzerland, they were trying to regulate the flow of. They didn't want to convert over to the euro, so they're trading francs over there, whatever the case might be. And they had a 3-year cap where they were going to allow the euro to pretty much fluctuate along with the franc to kind of keep things like even keel. Well, out of nowhere, usually there's news events in Forex. So, for instance, in like the United States, the first Friday of every month, there's what's called the non-farm payroll report. So usually once a month, that's when you hear in the news that somebody either hates Obama or Bush or whoever the president is because there's the unemployment rate is this or it was supposed to be that or whatever the case might be. That's a very big report in the United States. And across the entire world, you can look at all these different news events to strategize, okay, this is going to happen over here. Here's what we can expect out of it. This is going to happen over here. What are the economic standards around it? Here's what we can expect out of it. So if we know that the unemployment rate, if we think the unemployment rate is going to go down, that's beneficial to the economy because more people then have jobs and all that other good stuff, right? So then you would think then that the dollar would increase. That's not always the case, but you would think that it would increase. There's a high probability of it, so you put your money in there. Now, Switzerland, they didn't have a news release. Their banking just decided that they're going to end that cap. They're not going to renew it at all. And what happened was an incredible shift in the market where we were talking about a single pip, right? Well, in the course of minutes, I've never seen this. I've been trading Forex for 7 years, never seen anything close to this. It dropped 2,000 pips. It was essentially like a stock market crash, right? If you guys remember, a couple of years ago, there was that algorithm high-frequency trading that just happened like instantaneously within that, and that's what happened in the currency world. Now, where high leverage was the problem was all these people that had $1,000, $10,000, $100,000, whatever the case might be, highly over-leveraged in overseas accounts, they significantly lost a big portion of their money. Okay, because here's how brokers profit. Brokers aren't against you. Brokers just want you to trade. Anytime if you look at a currency pair, say the euro dollar, EUR/USD, right? If you look at that pair, what you're doing is you're essentially buying one currency and selling the other. So I'm buying the euro against the dollar. Okay, so I'm simultaneously buying that. Now, for me to put in that order, somebody on the other side has to be taking that exact same order on the opposite end. So if I'm buying the euro and selling the dollar, that person then has to be selling the euro and buying the dollar. Or you could have multiple people depending on the different pairs, but somebody has to be buying and selling the opposite portion of what I'm doing. Now, what happened with the franc is that the sell-off was so hard and so fast and so quick that there were no buyers on the other end of that trade. So the liquidity was gone. So people that put in their stop losses, they weren't getting hit. They were getting, and I'll talk about stop losses later. It was very devastating, and huge companies are going out of business as a result of it. One, because their liquidity, because for them, again, how the brokers make money is they hedge against. Okay, that was my point. They hedge against. So if I put all these bets, if we all bet on the euro versus the dollar, bet on the euro versus the dollar, and there's no individual person on the other end, well, then what the broker does is they go to the interbanks, okay? They go to the central banks, and they hedge that because they don't care if we win or lose. They just want us to trade. How they profit is every time we enter into the market, they take a percentage of a pip. So if I buy, 500 units of, whatever currency they're in, they're going to take a fraction of that pip, and that's how they profit. And they do very good at that, and they make a lot of money, very much like the casinos. At blackjack or poker or whatever the case may be, poker's a great example. They don't care whether you win or lose each hand, you're playing the other players, but each time the dealer takes a little bit of the chips and puts it into his pocket. Well, not his pocket, the casino's pocket, but you get the standpoint. That's how they profit. Now, what happened with that big drop is that there was not enough buyers on the other end, so the brokers lost, and then the people lost, and the people lost and owed money to the brokers, and nobody can pay money, upwards to, we're talking hundreds of millions of dollars here. Now, we didn't get affected by that. One, because we play very conservative. Okay, we look at a leverage of 50 to 1. So if I put in $1, my dollar is going to be $50. Two, we have a portfolio platform. We don't put all of our eggs in one basket. We're not making one individual trade at a time. We have a plethora of different trades. So from a fundamental standpoint, there should be no individual trade that's going to make you rich or make you broke. You're always going to hear the stories. There's going to be people posting on Facebook, or you're going to see on the paper, or whatever the case may be. You're always going to hear that success, but that's largely due to luck. Success in the Forex market is skill, and then hopefully a little luck is sprinkled along the way where you could get yourself into an environment where potentially you could reap a lot. But no one trade should have you be rich, and no one trade is going to have you lose. And if anybody's telling you different, they're generally trying to sell you on something, or they're just riding an immediate wave before the market changes, things are going to crash, okay? All right? Everybody with me so far? Am I boring you? Hopefully not. All right, so I'm going to talk about portfolio style of trading. Now, what we do, we don't look at the market as a market where we're going to trade in. We look at it from an investment standpoint. So we look to lower the risk as much as possible to have the highest amount of returns as that we can. And by doing that, we remain in the market 24 hours a day, 7 days a week. So we're in there all the time, and we're waiting for these trends to give rise. And when they do, we pounce all over them. We're all over it. As a result of that, that's why our win rate is significantly low. If you talk to a binary trader or your average Forex trader, they're always going to be bragging about potentially high returns or whatever the case might be. We have a low win rate. Ours is 40%. Except we continue to profit. I mean, this month we're over, I think, like 32% or whatever it is a month. And the reason is that when we win big. We took that wave and we rode that wave and we kept riding that wave until it puttered out, and then we got out of the market. So those individual wins, the 4 times that we win out of 10, we're good to go. And that's why when you're looking at your portfolio, as you're taking these individual trades, you don't want to focus your attention on just any one trade. You always want to focus on, and when you open up your Forex accounts, you'll see this. You'll see that it's taking all the different trades that you have open. There's going to be a number at the bottom. Hopefully that number is positive, but that's really the overall number that you want to be looking at. Okay, so if you're up $50 or $100, or if you look at it in pips, you're up 500 pips or 1,000 pips, whatever the case may be. That's the focus. So as trades fall off, and generally the first one's going in. Not always, I shouldn't say that, but usually the first ones that come off are the losers, because we tend to cut our trades fairly short if they're going the wrong way, and our winners take a while to win. I mean, they can be out there in the market for, weeks. I think our longest trade right now is 24 days. And our average trade overall is about 9 days on there. Okay, so that we look at things from a very portfolio-based standpoint. And what's significant about that is that we're able to withstand all market conditions. When you look at the individual traders, the people that are taking one individual trade at a time, you're going to hear all kinds of crazy nonsense. You're going to hear people that tell you to scalp. Okay, that means you want to go on a very minimal time chart. Okay, look at the market movements by a minute and try to take advantage of that. You want to avoid the news, people tell you. Some people tell you that you only want to take short trades, and all these things are essentially nonsensical, because you require the news to have the market move. That's how it moves. If there wasn't the news behind it, there would be nobody to speculate really on what we're going to do or where we're going to invest our money or our dollars or whatever the case might be to get that going. Okay. Nobody. If anybody ever tells you that the market only you should only trade in one direction, they're foolish. Because as I mentioned before, anytime you enter into a trade in Forex, you're essentially buying and you're selling a currency. So you're taking what's called a put or a buy, or I'm sorry, a put or a sell, and or a call and a buy. Okay, so think of a put as like put down, and think of a call as call up. Okay, that's in the binary world. In Forex, we talk about buys and we talk about sells. We talk about longs and we talk about shorts. Going long is up, going short is going down. Okay. So are we clear on the whole portfolio method at this point? Does anybody have any questions about that at this point? Any concerns? Any questions on that at all? I'm going to assume that. All right. So how our signal service works? I'm assuming everybody here is a member. If not, $10, get on board. What happens is you'll have just two areas of where you can take a trade. Okay, we post our trades from midnight to 1 a.m. New York Standard Time or Eastern Standard Time. Okay, so now where you are in the world, that might be like 9 o'clock or 2 o'clock or wherever it is that you are in the world. What's interesting about the way that we trade is because we're long-term traders, time sensitivity is not necessary. A lot of times, signal providers, they trade on a very short-term basis. Okay, they trade like maybe 13, 14, 15 times a day or whatever the case might be. And when they put out their signals, or if you even trade on that typical way on your own, you know that market timing is very crucial for what it is. I mean, if you're off, I remember I traded in the green room on binaries, and literally, I'm not even joking. If you were like a cough away, you could lose. If your internet connection was too slow, you could lose. We would always do these time checks where we would all try to synchronize our clocks together. And it would be like 103 in 1 second, and 2 seconds, and 3 seconds, and 4 seconds, because those seconds mattered. And that's not conducive to your average person's style of trading. Your average person is a working guy, whatever the case may be. You got a family, or whatever it is going on in your world. So when we place a trade, it's not that time sensitive because we're trading so long term. You might miss out on a pip here and there, like maybe 10, 20 pips or whatever it is that you wake up or whatever the case might be. But we go for such long profit targets that it's okay. It's okay. So if our signals pop up and you wake up at 6 in the morning and check it, you're great. You're good to go. But how to obtain those signals is, one, you can log in onto the website, and in the members area, you're going to see where the open trades are. Okay, that's our current portfolio. What you do not want to do is you do not want to trade that current portfolio, because those trades are already in motion. They could have been in there for 2 days, 5 days, 7 days, whatever the case might be. You don't want to just go and take those trades, okay? You want to wait for the new signals to come out, and as those new signals come out, you're essentially creating your own portfolio, and then in about 30 days, both of our portfolios should sync up then as the new trades fall off and you enter into new things. You can, if you want, take the trade. If you look at the chart and see that it's relatively newer, or whatever the case may be, but I would just make the recommendation that you don't, and you just take newer trades as they come along. So what are they doing today? Oh, okay. You're making a comment on that. Okay. What was my other thought process there? The secondary, and probably most people that have signed up for this service have signed up for the SMS texting, and that's where when our texts and when our trades come out, you can get them in the form of a text message, and it gets sent directly to your cell phone. On that, you're going to see the currency that we're looking at. Now, we closely monitor 28 currencies. Okay, so you'll see the currency that we're looking at. You're going to see it's going to say either short or long. So again, if it's short, you're going to sell, and if that's long, you're going to buy. Okay, and why I use long and short is that's really just a lingo. I mean, I'm just used to doing that. We could buy and sell, but your individual trading platform might have long and short. Either way, it's good lingo to learn. Short is down, long is up. You're also going to see You're always going to see a stop loss, no matter what. Okay, so that's SL. We'll have that as SL. And then the number that you're going to have. Now, there's two types of orders that you can place in the Forex market. With binaries, you just press a button and you go. Okay, you just it's always what's called a market order. You just press it, you're in, you go. With Forex, it's different. You can time it. You can time when you want to enter the market. You might say, you know what, I see the currency trading at like $1.02. I'm not going to get in until it's $1.03. So you could create a limit order, and that order would stay pending up until the point. Yeah, our trades can last anywhere from a single day all the way up to really an indefinite period of time. The good news is the longer that the trade takes, the more profitable you're likely to become. Because that means that we're on a trend, we're riding a trend, and we're up and going. Okay, but back to stop loss. Okay, so there's order types. So we always take market orders. So we don't say we're going to get in the market at a particular time. When we make our trade, we just hop right into the trade. So when you wake up, same thing, you can just pop, boom, right into that trade. We always have a stop loss. What a stop loss is a number that you know that if the market hits that number, it is out. That's a crucial way to manage risk. Imagine yourself being on the wrong side of that market ladder. Many traders are afraid to lose. They're afraid to lose, and they convince themselves that if the market goes down, it's going to go back up, or whatever the case may be. So many people do not trade with a stop loss and even brag with that stop loss. And those people, they're always the ones that just want to talk about their losses or their wins and never talk about their losses, because their losses are likely significant. You always want to have a stop loss because that's minimizing your risk. The number one rule of trading and investing is not the profit, but to preserve and protect your capital. That's your family, that's your babies, that's your money, your hard-earned money. Beyond anything else, think of it like a war. You want to protect all of your soldiers, and the only time you want to take them out into war is when you know that they have the best chance of success and survival. And that's really how you kind of want to look at that. You don't want to just go crazy and go nuts in there, because you can lose your ass real fast in this market. You might get lucky and win a lot, but that's the worst thing you can do. I have a friend, side note, I have a friend, John, I shouldn't say his name, but I have a friend who's a gambler. He was a professional gambler. He was good at poker, but he'd lose all of his money in slot machines. And one day he went down to Vegas on a weekend trip, and he won $10,000. And I told him, I was like, John, that's easily the worst thing that could have happened to you. Because in his mind, what does he think? Oh, it's easy money. I can go down there, I can pull a lever, put some money in there, sink some cash in there, and now I can make $10,000. Well, suffice it to say, John's now a used car salesman a couple years later, because he just couldn't control that. So you might get lucky in the Forex market. I'm not saying you can't, but you don't want to try. This isn't about luck. This isn't, go play the lottery. Go to the casino then, because at least the drinks are free. And you got pretty ladies and guys walking around, and entertainment, music, and comedians, and all that other stuff. So you want to gamble, that's a good avenue to gamble over here. We're gonna take this pretty seriously. You always want to put in a stop loss. Now, I don't always put in a take profit, okay? Because sometimes I do when I look at the fluctuation of the market, or I still pull out money. But sometimes I don't. And if I don't, it's generally meaning that we want to see how high this is going to go, because we can always readjust our stop loss. So if the market starts moving in a positive direction, you might see a text that says, okay, pound dollar, move stop loss to this given number. And then we know that, okay, we're locking in some profits. So then that way, if the trade goes against us, we're still good to go. And we significantly increased our return, and we significantly decreased our risk by moving that stop loss along with that trade. So we always are looking to preserve our capital, to minimize risk, and get the most that we possibly can out of it. Okay? So take profit, we shorten it down to TP. Okay, so it's TP. So your typical trade is going to say this currency, so JPB, USD, long or short, the stop loss and that given number, and then the take profit, and if there's no take profit, there's not, but if there's a take profit, we're going to have that number there. At times, we manually close trades as well. So you might see something where it says like manually close AUD USD, JPB USD buy, stop loss, take profit. So those are how the signals work. All right. Now, where you place those signals, where you place those trades, is in your broker. Now, the nice thing about Forex is that you can trade with a penny. You can get in the market at any given dollar, and the same concepts and theories apply. So there's no yes, it takes money to make money, but a dollar can trade all the same as the concepts and the principles behind it trade all the same as $1 million, as $10 million, or whatever the case might be. It's just incrementally smaller. So we recommend a company called Oanda. I'm going to spell that out here. That's who we recommend. I'm gonna make it known, very well known, that we profit nothing. That is not an affiliate link. We profit nothing for anybody signing up and using that service. Oanda doesn't even offer an affiliate program. The reason why we like them is, one, they're U.S. regulated. That's important for everybody. What that means is that there's the CFTC has created rules in the United States, particularly for Americans that are investing in the Forex market, to protect us. That they have to have certain levels of capitalization. They have to meet compliance standards for us to do that. Like, for instance, if you were to, it's really down to, if you had $1 million, where are you going to put it? Are you going to put it in like a New York mafia family, or would you go to like Northern Trust or Bank of America or something like that to put your money? You're going to put it where you know that there's a reputation, that there's something to be solidified behind. And a U.S. regulated broker. By far and large, the people that do not do that are people that are risk seekers, and they're looking to go outside of the United States and take a broker that's going to allow them higher leverage because they want to get those quick returns. They want to try to gamble, and they want to try to win a lot. But the thing is, they don't. You might see their posts, and they might get lucky, and when they get lucky, they turn around and sell their service for $200, $300, $400, and their business model now is to make money off the signal services and not do what we do, which is to teach people to actually trade Forex, okay? So back to Oanda. Oanda has the max 50-to-1 leverage. So right then and there, be able to do that. Now, the way that we trade, we could actually trade at 20-to-1 leverage, so our $1 will be $20 in the market. But I just prefer the flexibility that if something did crazy happen, we're not going to get any type of margin calls. What a margin call is when the market moves against you and you have no more liquidity in your bank, the trade's automatically closed. So, for instance, you have $5 and you have it leveraged at $50. So, and you're trading like dollar pips, right? And the trade goes against you and it falls 50 pips. Or I'm sorry, it falls five pips, right? And you're trading $1 a pip. So even though it went against you, you only had $5 in there. It's automatically going to close it out. You've lost all of your leverage. So that's why some people with low amounts, they think that trading a higher leverage is the way to go about it, but that's not the case. With Oanda, you can control your unit size. You might have heard of something that's called a lot. A standard lot is 100,000 pips. So if you just look at basic U.S. currency, that's $100,000. Okay, so if you trade one pip, you're trading $100,000. Depending on your leverage, you either have $100,000 or you have as low as $1,000, really, depending on your non-U.S. regulated broker or whatever the case might be. All right, so obviously we don't want to trade standard lot for that. All right, so then they have what's called a micro. Mini lot is 10,000. And then they have a micro lot, which is 1,000, and then you even have a nano lot, which is 100. Okay, now you're trading like pennies, pennies to be able to leverage up that type of dollar. But the Oanda, they go, it's like microscopic nano lots. You can go as little, you can trade one individual little tiny unit, which is like a hundredth of a penny or whatever the case may be, and I love it. And the reason I love it is how we trade with the increment, how we compound our trades. So this is key importance. Trade size is significant with what we do. If you go in there and you over leverage, you could come back with some incredible results or some devastating results if you're over trading on too many different trades. So no matter what the amount that you have in your account, you want to take no more than 3.5% of that per trade. Okay, and I'll explain what I mean by that. Meaning if you have $100, you want to make sure that you don't trade any more than $3.5. Now, how we came up with that figure is very easy. We monitor 28 currencies, so divide 28 into 100, and you come out with like 3.57 or whatever the case might be. And that's so because in theory, we could be in 28 trades at once. Usually we're in about a dozen, sometimes it gets up to 20. Right now I think we have about six in the pot as we wait for this Swiss deal to kind of, sputter out, and then we can dive back in to the market. But that's how you really want to be able to look at it. You want to minimize your trade size, okay? So with the best way that you can do that on a consistent basis is within Oanda, they have a default setting that if you go into that default setting, you can select your trade size to be 3.5% of your net asset value. What your net asset value means the amount that you have in your account minus or plus the amount that you currently are up or down in the market. So if we have $100 and right now our open trades are up on $50, our net asset value is $150. So you could go ahead and you could trade that amount. Anything higher, you're on your own. If you want to be more conservative, go all the way down to 1%. The account, just to put this in perspective, the account that we trade in for this, we trade at 1%. So if we have, I think it's got like $1.2 million or whatever the case might be. So we trade 12 lots, like 12 point whatever given lots to equate roughly that 1%. And based on that alone, we've achieved 30+% profit, in a given month. So multiply that by 3.5. We could have easily doubled the account. But we only just take the standpoint of we want to be conservative. And if we happen to do anything better, it's just gravy train because we can already do good at the 1%. So if somebody wants to do 2-3% and outshine and do better, that's great. That's gravy train. We take a very conservative approach that if anything happens or it's out of whack or it gets for the better, whatever the case may be, we just know that things are a little bit under control. Because if you ever think of compounding, okay, that's I think like Einstein said it. It's a played out concept that it's the greatest. It's like the 8th power of the world. It's the greatest significant thing known to man, like the compounding dollar. And if you take, I think Dwight ran the numbers last week or something to that effect. That if you just had $1,000, I'm not saying you need to start with $1,000, but if you had $1,000 and you put it in the bank, and you just compounded that 6% every month, which is the numbers that we try to achieve. Granted, we hit over 30, but do not expect it every month. I think in December we had 2% or something like that. This month we had 30, so it all averages. I think we're at a 10% average every given month, which is incredible. But 6%. We're conservative. We're looking at 6%. Anything more, great. Go put some extra spoilers in a car or something like that. If you compound 6% every month, after 3 years without adding any other dollar to it, and you just let that grow, you would have over $30,000. That's pretty impressive. Now, that's not income generating, right? But that's a nest egg that you had $1,000, and 3 years later, you have $30,000. Or if you had $100, now you have $30,000. Now compound that out even more and more and more. This thing can truly grow. Now, the reality of it is nobody really just sits there and lets it sit. As the money starts to grow, you need car repairs, you want to take a trip with the family or whatever the case may be. So you want to extract, money out of the account, which is more than fair to do. But you want to do so in a manner that the account is going to continue to grow. There's a website called, Dwight says 5 years, not 3 years. Sorry, myfxbook.com. myfxbook.com is a third-party service. And what they do is you can privately and securely link your account to theirs. and they can do what's called a read-only. They can read all of the trades that you make from there, and they're able to create the data. So, and that's where we have 100% transparency. We flaunt, we show, we taunt, we put it out there that this is exactly who we are. Our results speak for themselves because you see every single trade, every single trade. The only thing that the public doesn't see is our open trades, and that's why you pay a nominal $10 availability to see, but we put everything out there. Now, me and Dwight had a little interesting experiment this last week, and I'm not naming any names, but I went to some of these bigger signal providers that bragged, hey, we're making this money. This guy just gave his mom, had paid off his dad's mortgage. This guy did this. They always talk about these impressive figures. And I asked them for one simple thing. I'm willing to invest. Could you please link your account to my FX book so you can have 100% transparency so I know what it is I'm getting into, and I'll be more than happy to invest. And the reality of that is I would do that. If any one of you are an extremely well trader, any one of you, I will max out every dollar I have if you can show me the profits that you claim that you're getting on a routine and perpetual basis. But what was interesting was that all of them came up with excuses, every single one. And then it always turned into an attack on me, or how dare you demand this of me, or who are you to me? And then they get to insulting me, which is a typical, I'm not going to go into the psychological factors of it, but they're just essentially trying to turn the tables on me, deflect it off of themselves, when all I was asking for was something very prudent. By profession, I'm a financial planner. So and I'm not going to go into my job much at all, but I specialize in asset allocation, retirement distribution, all these dollars and figures and, portfolio management. And that's why I do so well in the Forex arena, because I just really took those principles and placed it over there. But if I sat down with a client, by law, I have to provide them what's called a prospectus. A prospectus is every single piece of information that company can muster. So American Funds, for instance, they have the Investment Company of America. You can look it up, and they have all the track records, they have all the trades, they have the fund managers, they have the fees and the expenses, they have why they picked it, they have who they're putting it in, what sectors, what companies. It's really like a 100-page document that nobody ever reads. But by law, I have to present that to somebody. So if somebody says, how good are you? I just show them this link, and everything is there. Everything is there. You can see all the trades, every single trade that we take, the wins and the losses, and it creates statistical probabilities. So if anybody, and I'm not against any other provider, but if you're going to take advantage of using the services of any other signal provider, and hey, I'm open to partnering up with them all the same, full 100% transparency is a must, because if that's not the case, then I have to believe, just logic has me to believe that their business is to sell me a service for a good chunk of change, and without any promise or any type of showing other than their trust and their faith in the word that I could stand a profit. And if I don't, they're likely going to blame me. No, you didn't do it this way, you didn't do it that way, or whatever the case may be. Just logic alone has me dictate that. Okay, the odds of that happening with results will vary with us. They will. We could all have a MyFX book, and it's going to always be varied. But at the end of the day, after 30 days, and we are all on the same page, it's just going to fluctuate. Maybe we're all probably going to be within a 5% differentiating figure of each other, just depending on what people actually enter in the market or for what have you. So that's a very important site. Now, the reason why you should, once you have a site, and again, I get paid nothing for this. There's no affiliate. I get nothing to profit on this. The only reason, and you can leave it private. You don't even have to have it public. You could go on there, you could create your own MyFX book account, and you could have it entirely private. Nobody ever has to see your figures. They don't have to see your account size. They don't see anything. It can be entirely, it's like Facebook. You can lock it down just for you if you want, or you can just put it all out into the world. The reason I say that is because you want to know your individual stats. And on my FX book, they're going to have the expected profit per trade that you'll get out of the account. So as you're trading and you see that figure, let's say, for instance, let's say that expected trade profit per trade is $250. Okay, and you want to start pulling money out of the account. And you trade 10 times that month. Okay, well, our average, we trade on average about 30 to 40 times. You trade 10 times that month. You now know then, 250 times 10 is 2,500, right? So then I would divide that number by 2 and take out half that. So you can pull out 1,250 for yourself and let the rest still continue to spin in there. And that way you can start pulling out income for yourself if you want, and your account is still able to grow. Okay. So does that all make sense thus far? Okay. Any questions at all at this point? The pulling of profit, are you talking about? Okay. So on your MyFX book account, you're gonna let's see if I can. Give me a second. I'm gonna see if I can actually just pull it up. I hate my computer. It's not gonna pull up for me. But do me this favor. If you guys have the availability, go to our website. Go to $10signals.com, and then you're going to see a banner. The banner is going to say, "Click here to see our results." Okay. If you click on that icon, it's going to pull up our MyFX book account, our very public account. Okay. On there, towards the middle section, you can see all these stats, and it's going to talk about standard deviation. It's going to see all these little things that really don't make sense to anybody. It's going to talk about Sharp ratios and all this other high-techy stuff that nerds like me, get all excited about. But one of them is going to be trade expectancy. Okay, and I think right now for us, we're like at 3,000, 3,200, or maybe it's 2,800. I can't remember what it is. So if I was to pull money out of that market, all right, and we traded, I think, like 30 sometimes, so then just do the number. You take 30 times 2,800 or whatever that figure is, and that's going to give you 60,000. And I don't know, my math is false right now, 60 to 70,000. And I'll say, you know what, I can take out $35,000 out of this account for this month. And then my account can still grow, and it can still retain profits, and everybody's happy, and really going from there. So that's what I mean by that. So let me go back here. Okay, does that make sense on Damaris? Okay. What questions? I'm gonna open this up now. I want to spend the last 15 minutes on questions. So and believe you me, there's no stupid question. The only stupid question is one that's not asked. Okay, so if you need me to spell PIP for you, or whatever the case may be, we can go from there. Okay, so you say that with $100 in your account, trade 3.5%. That's 0.35 pips, and yeah, the likelihood of you being margined out is so low. I mean, it just can't. What would happen for that to occur? We would have to. Here's the scenario for this to occur. We would have to be in 28 trades, and they would all have to be losing. And that alone is impossible, because we only monitor, even though we monitor 28 currency pairs. Those pairs are all correlated. So half those pairs involve the dollar, or not half, but like the eighth of them involve it. So we monitor 8 currencies, and out of those currencies we have all these different pairs. So it's the world would have to end, I think, for every currency to collapse all at once for you to risk that margin call. I mean, when I'm talking about low risk, I'm talking about low risk. If you look back at that MyFX book.com account, if you go down towards the middle, stats are, you're going to see a button that says risk of ruin, a little tab, okay? If you click on that, that's going to show you the probability as we currently trade of you losing your money, okay? So right now as we have it, for you to, I think it's like, and I don't have it right, under 8%, but for you to lose 10% of your account, so if you have $100, for you to lose $10, there's less than an 8% chance of that happening. For you to lose $20 out of that $100, I think it's less than a 1%. And then when you get down to 30%, it's not even probable. It says it's like less than point. It's just not even. It's statistically improbable for you to like blow your account with the methodology and the way that we trade. It's just not. It's not possible. And why? How is that? Well, it's because we basket trade. We try to wrap our arms around the entire market and say, okay, what's the market going to do? And when it starts making moves, then we back out of the areas where it's not going in our favor, and we push our money into the direction of where it's going. Where we're sitting and we're waiting, and we take advantage of the trends as it's able to make. Now, there's times where a trend has to become first see itself, right? Where I look at it and like, okay, that's what I do every day. Here's me in a nutshell. I go on there and I say, that's probably a new trend. That's probably a new trend, and I make an appropriate trade for it. And 6 out of 10 times I'm wrong. That's not a trend, and then we back out of it. How many trades do you expect to call each? Again, as the market's moving, like today, there's probably going to be a call or a trade today. I'm looking at the pound. It's called the loonie. There's names for all these. So if you ever hear me say loonie, that means the Canadian dollar. So like the pound loonie, I'm looking at that. We're probably going to sell that tonight. So you'll probably get a call. Just looking at it how I was, but I always wait till the day ends for me to monitor that. But on average, this is on average, we get about a call a day on average. Some days we don't. 2 days, if I'm not mistaken, and that was largely in part because of like a fourth of what we're looking at, we're not even trading right now. Second to that is the market's consolidating a little bit, getting ready to make reversals, and then usually when we hit, they all kind of hit at once. So all of a sudden you'll see like 3-4 trades in a day. The next day another 3-4 trades, another 3-4 trades, and then also we're up to 20 trades, and then we're just letting it sit, and then we're all just watching the market move around, and then one of them we have to sell off and get rid of, and we might pick up another one, and we might add to another one, and that's really how it works. So if we see like the yen going in the right direction, well, that yen correlation is probably like if you ever look at like pound yen and the Aussie yen and all these yen, they call them. It doesn't matter. When you look at all the yen pairs, you see all those, they always kind of move around in the same direction because the yen is so extremely volatile, especially given the factors that they have over there. One of the most volatile pairs is the pound yen. That thing moves like crazy. I mean, it's just up and down hundreds of pips a day, and it's nuts. And there are some really weird exotics, like with the Hong Kong dollar and all that other stuff, and like the Taiwanese. I can't remember what their currency is. I don't deal with any of that because that stuff is just moving so far in left field, and it's so sporadic that I can't even. And I think I have a seasoned mind around this. I can't even wrap my mind around it. That the only reason I would ever get like a Taiwanese dollar is because I'm going to like Taiwan, and I really need to just exchange my currency to spend their local dollar there. How many trades do you expect to call? So no problem if I don't enter. I'm not going to say there's no problem to that. Okay, I'm not going to say that. The most optimal time is to do that when we do that. But if you look at a chart. Okay, here's how I chart, by the way, and I'll answer your question in a second. How I chart is I use MetaTrader. So I use MetaTrader 4, and I pop that up. And MetaTrader 4 has a mobile version of it. So if you have an Android or if you have an Apple or an iPad or whatever the case may be, you can download a mobile version. So I trade this massive account on my mobile phone, which sounds ridiculous, but it's the truth. You see all these like traders. I think I was talking to Damaris about this. You see all these guys bragging about their setup, right? They're like, show me your setup, and you got guys buying like 60-inch plasmas and like 6 desks, and they always want to feel like they're that Wall Street guy. Like that. They'll put their faces on Leonardo DiCaprio, that Jordan Belfont or whatever the case may be. Forget the fact that he's a criminal and a drug dealer and all that or whatever he was. they always want to have that feel that that's the way to go about it. And it reminds me of like so many different businesses where you always get ready to get ready. Like you get your LLC, you get your licensing, you get all this, you open up shop, you buy a new computer, you get your notepad and your calendar, and then really nothing ever happens with it. That's not how we trade at all. We trade very simply. I trade on my phone. I kid you not. I would be embarrassed to show you how I'm walking around in my underwear right now in my room. I'm pacing back and forth in my underwear on a conference call, talking about currency. So you don't need to have this fancy get up. You don't need to have expensive programs. MetaTrader 4 is a free program for you. You can create a demo account on that to monitor your chart. Orlando, God bless them. I hate their charting platform. I cannot stand it. But now to get to your question, if you go on MetaTrader or whatever your favorite charting platform is, I trade off the daily chart. Okay, so I trade off the daily chart, and I use candlesticks. And in another training we can talk about. I'll go online and I'll watch my screen and we can talk through the methodology a little bit more, how I trade on what I look at and what I look for and all this other stuff. But you'll see there that there's not that much fluctuation. I mean, there can be, but you're missing. You're essentially missing out on the European session. Okay, so the European session, you could miss out on like 50 to 100 pips or whatever the case might be. But at the same time, keep this in mind: 60% of our trades lose. So that could be in your favor as well. So I'm not going to say that's not. It's not going to. It's probably going to even itself out at the end of the day, because the trades that you're missing out on in one direction, you're going to capitalize on in the other direction and all that other stuff. But here's what I do know is if you do wake up in the next morning and you make that trade, it's not going to significantly devastate your account. Your results are not going to be that drastic from us. My suggestion would be very simple: get the SMS. When you get it, just wake up. Go to bed at like 9, 10, whatever you do, just wake up at midnight, go get a glass of water, and then go pee or whatever, and then that 5 minutes that you're in the bathroom when you can make your trade. And then you can go right back out of bed. So next question. So hopefully I clarified that. Can you tell us how the apps we need to do this strictly on our phone? Okay, so MetaTrader 4 is one. If you have Orlando, whether you have a practice account or a real account, they have what's called FX Trade. Okay, so Orlando's FX Trade. So I'll put that in there. So and that's available on both. I'll just type all that up 1 second. Okay, so those are the two apps that I use solely to make this whole thing work. When I trade on MetaTrader, it automatically updates. It's connected to the account that we have for $10 signal, so that they're that's where that's at. And then I have my personal account that I just I trade my personal account. I just log into that and boom, I'm trading my personal account, and I'm done in like 15, 20 minutes or whatever the case might be. So next question. So we're expecting a big drop and then climb on the URC. And what do you think? Okay. I don't. Here's what people do. People try to be like psychics. Like if you ever remember Montel Williams, there was that Sylvia Brown or whatever the case might be. She would sit there and she would say, "This is going to happen," and she would make 100 celebrity predictions. Right, and then the next year she'd come back on the show, and Montel would be like, "Oh yeah, well, Brad Pitt did break up with so and so, or this person did finally get married, or that person did lose their job, or that person was a drug." So she was like maybe 5% right on this on all of her different predictions. People do that same way with the stock market. They're going to say, "You know what? I bet this is going to happen. I bet that's going to happen. I bet this." They anticipate market movement. That's the silliest thing that you can do. Again, no offense to anybody that's trading that way, but here's why it's silly. You don't know. You do not know. There's no way that you ever could know what the market is going to do the next day. I don't know what the market is going to do the next day. So what I do, instead of trying to get in on the very beginning, that's not my job. if I know a trend's gonna, if I know, here's what I know. I know that there's probably like every 2 months there's like a pretty wild trend at some currency pair in the market. But what I know last year is I had all of them. Every big move I just had a tiny chunk out of it because I'm not trying to gather all the pips. When that thing's on its way, that's when I get on, and that's when I get off. Think of it like surfing, right? When does a surfer get on? He gets on that wave when the wave is already cresting. And he doesn't ride it all the way down to the beach. Sometimes he does, but usually he crashes somewhere in between. He just captured a part of that movement, and that's all that I'm seeking to do. So I can't tell you if the euro dollar is going to drop. I don't know. I'm going to wait for it to drop, and then when it drops, I'm going to get in. And then I'm going to put an appropriate stop loss, and I'm going to ride that until it starts fizzling out. You can usually tell when trends start to fizzle because the candles get a little bit smaller or they start reversing direction and all that other good stuff. And then that's when I get out. I trade purely on what's called a naked chart. I don't use indicators or anything like that. So that's yeah. So hopefully that more than answered that. But to that point, I just saw that today some kid, and I respect him well. He was like, hey, I saw the euro yen drop, and I wish I would have got in on that. And the thing was, yes, he was correct, and yes, he should have got in on that. But he should have got in on that if that was his anticipation. But for every guess like that, there's going to be so many of them that are wrong that by guessing it's just not going to work out. Same thing with indicators. A lot of times people in a trending market, that when the market's moving up and the market's moving down, the market's moving up and the market's moving down, you can do anything in the market and make money. It's almost like we're showing that up on our time. Hopefully this thing doesn't just shut off at 9 o'clock. I apologize if it does. I'll open it right back up. Like in the early 90s, like you could do anything you wanted in the market and you made money. And here in Forex, if the market's trending very well, you're always going to make money. So you're going to have people that are very indicator based, where they look at moving average crosses, and we'll talk about indicators in another session. Or they say, okay, RSI is this, or Bollinger Band's that, or whatever the case may be, and they look and they see, hey, you know what? Over the last month, wow, look what this did. I'm making money left and right. So I'm going to put together a system. I'm going to profit off that. I'm going to show my results, and I'm going to sell to everybody, right? But the market changes. Now, when the market goes into a range where it's all choppy and it's moving up and down, all those strategies just went to hell. And and they're over leveraged, and they're they're bent too much on one trade, and it really just went against them. No, I don't use any indicators. So how long have I been trading? I've been trading stocks, bonds, and mutual funds for over a decade. I've been trading currency for 7 years. No, I do not, and that's very key. I do not do this. Well, I guess I do this full time. I own a business, so I'm a financial planner, so I'm my world 100% of the day is wrapped around. So I guess yes and no. I look at Forex like I look at all my other investments, whether I look at, my mutual funds and stocks, everything that I'm holding. For me, I'm very conservative. I have a dollar amount in my head that I want to earn. And when I earn that amount of money, that's when I step away. So I personally don't pull funds out of it. I just take immediate, I'm in sales, right? So if I sell a share mutual fund or something like that, that's my immediate profit. But then there's what's called a 12B1 fee, a trail that I let sit. And then I build my book of business, and that's how guys like me become stupid with money. You're like, well, how did this idiot make so much money? Well, we built a book of business or whatever. Okay, so that's an individual. Here's why I don't like binaries. Binaries depend very much on a high win rate, a very high win rate. And of every binary trader I know, none of them have a long-term experience, because binaries is kind of a relatively a new thing. You're going to hear a lot of, I came from a Forex-based world, so when binaries came out, It was like the devil. It was like, what, you want to go to a casino or whatever the case may be? Why would you ever in the world try to achieve like an 80% win rate all of the time? I mean, it just makes, in my opinion, like no sense. And then even how it's set up. If with binaries, like, right, if I put $100 in, I don't even get they don't even match me dollar for dollar. So I put in $100. They don't give me 80 back. But if I lose, I don't lose 80. They take my whole 100. So to me, it doesn't even make sense. It just doesn't. I mean, I tried. Like, I mean, when Dwight was like, just try it out. Yeah. So I followed him. And that's a buddy of mine. And I dived in, and and the whole time I was fighting him on it. Like every day, I was just like, here's why I don't like it. Here's why I don't like it. Here's why I don't like it. Here's why. And those are different reasons. So I'm not going to tell you to not do binaries. I'm just going to say I have nothing to do with binaries because it just to me the statistic it just doesn't make any sense. And the only people that I know that are making money on it are the people that are selling services. And I would bet any money. I would bet you any money that they're making all of their money from the service because then they get, you know how like I shared with you, Oanda, I don't make a penny on it. But usually signal services attach themselves to a broker, a binary broker, and for every person that signs up through them, they're going to get like $100, $200 or whatever the case might be. And then every time you trade, they're going to get money. So if you got like 100 people, bam, you just got like 20 grand or whatever the case might be. And then every time they trade, you're going to get like another $5 every time. I mean, that's some significant cash flow that they could not even be a good trader. They can just be a good salesperson. And I'm not about that. I know we charge for this, but like, come on, man. It's like I feel like, so many people have came to us and said that we're too low in price. That we should. I'm not even kidding. That we should like. And me and my partner, we talk. Like he was like, hey, should we offer this at 50? And we're like, no. Let's just keep this. Let's just keep this at $10. Just let anybody have an opportunity to get involved because where we're going to make our money long term is not from the sales of this. It's from the Forex account that we're making. And the only reason that this company even came to be born was out of these arguments that I had about 4 months ago and the frustration I had where I felt that people were being manipulated by these binary traders and these signal providers and services. And I wanted to go out there and I wanted to show people that, hey, this is how people actually trade. I do this, again, I manage money for a living. So the experience that I have comes from an institutional level. When you put your money into the bank or whatever the case may be, what do you think they do with that, right? What do you think they do? Well, they loan out money through mortgages or whatever the case may be. But the bigger banks, like your U.S. Bank, your Bank of Americas, your Northern Trusts, all those banks, they trade currency. I'm not even kidding you on that. They trade currency, and they try to do that at profit. And instead of like trading with 10, 50, 100,000, they trade like 100 lots at a time. So they're trading like $100 million or whatever the case may be with no leverage. Because nobody can. Who's going to leverage $100 million? You're just not going to do that. So they trade at a level that has a significant amount of money. So this is what I'm telling you. I'm bringing you like true knowledge and experience into an application where your average guy or your single mom with 5 kids or whatever the case may be has an opportunity to make a difference. And I'm not promising income generation. I'm not going to tell you that you're going to turn this little bit of money and you're going to be wealthy off of it in a year or whatever the case may be. What I am saying is that through consistent proven results, you can turn any little bit amount of money into a sizable nest egg and you can retire early. The name of our strategy is You Will Retire. We have a website that was You Will Retire, but then we decided to go with a different format. But we looked to get people out early and really show them like good, solid money management skills and how to manage their dollars better within the investment. So you can take the strategies that you have here and apply them in any arena. When you start learning what standard deviation and Sharpe ratios are and all this wacky, crazy stuff, if you ever want to learn it, you can take that in any arena and figure out the formula, how to calculate it, and look at a Sharpe. That's here nor here. That's stuff like way down the road. But you get where I'm at now. So let's see if there's any questions. I want to say what about share transfer. Yeah, that's true. That's very true. I mean, we're the amount of, I mean, I think we're spending more than we're even making at this point because we're new. But there's no amount of subscribers that we're gonna have that's gonna make us, either one of us, or any partners that we might have in the future, independently wealthy. It's all gonna. I mean, it's to sustain this. I mean, we are going to make something out of it because I am spending like an hour of my time, and but it's nowhere near to the effect where, I mean, just imagine if you guys had a cough up 250. I mean, that's just stupid. I'd rather have you take that 250 and go make double it or something in a year, as opposed to spending it on hope. Any other questions at all? Yeah, exactly. If we're losing money, you guys are losing money. If we're making money, you're making money. I mean, that's how this thing's going to work. And honestly, I don't want to lose. I mean, I truly average like 5, 6 to 7% a month. So look for those types of returns, and really love these returns. Like when you hit like a 30% return, just brace it, love it. With a 30% return on a month that we're having a launch. These aren't even manipulated numbers. You can look at all our trades. It's still based on the same fundamental principles that we've had over the last quarter. We had a 12, 13%. I mean, it's just been good, and that's because the world's crazy. And when the world's crazy, there's a bunch of people that disagree with each other. When there's a bunch of people that disagree with each other, they're making differentiating decisions, which creates market volatility. And when there's market volatility, there's an opportunity for us to profit. If everybody believed the same idea and the same concept, the market wouldn't exist. So we want to capitalize on that. Yeah, thanks, William. And I think that was our goal, is really to do that. So go tell your friends that we do offer referral bonus, so we're cutting our profits even more. By giving you guys 40% of everything. So how that works is it's free. There's no cost. Some programs you have to pay to be an affiliate. It's entirely free. You get your own back office at no cost there. And if you sign somebody up, for every subscription, you're going to get $4 off of that. If they sign up for some additional, if they sign up for the $4 thing or whatever the case might be, the SMS service, whatever, you're going to make an extra $1 off that. So if you sign up 10 people, boom, now it's just a little bit more income for you. So you're still not going to get rich off that. But I could be wrong. You could be this powerhouse internet marketer and bring on 1,000 people, and now you're making $4,000 a month or whatever the case might be. So, but to me, this is, if I was an internet marketer, talk about such an easy sell. It's you have a site that's showing the results. That's all you need. If you don't know anything about Forex, come on. Every one day at 8 o'clock, we have a guy that's going to talk about it for you. If the man needs be, we can hold up to 200 people in this room. If we need multiple, we can. We'll have multiple sessions or whatever the case might be. But you bring them into the room, they can hear me talk and they can learn a little bit about Forex. If they don't want to learn about Forex and they just want to make money, great. They can just sign up for the signal service and really away they go from that. You can profit a little bit, and it's $10, man. You're not like, I'd be hard pressed trying to sell John Anthony's service. I shouldn't be mentioning another competition or anything like that, but I'd be hard pressed to sell like a $250 or $500 service, even if it's one time. Even if it's a one-time thing, especially, because if someone came to me and said, "Hey, pay $250," I'm gonna say, "For what?" Oh, because somebody put like a partial picture of some profit. Somebody fanned out $20 bills and took a picture of it, or somebody went to a car dealership and stood in front of a Porsche. it's like a what, So you guys we have tools for you. We have banners available, so you just go out there and market the heck out of it, make a little side income. If you don't worry about it. No big deal. But I can't think of an easier way to sell this service to somebody for you guys to generate a little bit more extra income for yourselves on an annual basis. So any other so call will be So every Monday at 8 o'clock we're gonna have this call, and it's gonna vary. Some of this is gonna be repeat. We're gonna try to record these and always put them online. Ideally, what I want to do and I say this now, but I'm really going to hunker down and actually do it. I want to create like a systematic class, like, like a course 100, course 200, course 300, no tests or anything like that, and just kind of have those rotate through. So then that way, if you don't want to go on, once you learn this, you don't want to hear me talk about this every single week. You want to maybe learn something different and something different or whatever the case might be. So you might only need like a conference call, once a month. Or if people want more of a recruitment type of call, we're flexible for that, where maybe the first 15 minutes is just giving an overview. I mean, we're very open to suggestions. This is, as much as this is our creation, this works only because you guys are around, and we need to hear what it is that you guys need and what tools that you need to both in the Forex arena, but also if you're willing and inclined to successfully market what we have. So we're very open to all of that. So I think we should probably wrap this up. So any other questions at all? Yeah, there should be. And again, I just looked at it earlier today. I can tell. If I trade it like all the time, I'll go nuts. So I make myself like wait. Earlier in the day, me and my partner, we were talking, and I just looked and I said, okay, it looks like we probably have a trade tonight. So yeah, the pound loonie is probably going to dive tonight. Hopefully it will. And I'll put the signal out there. If there's any hiccups and issues, we have 2 Facebook groups, okay? To get involved, friend me or something so I can invite you then into that. One is public. All right, so the public one is called $10 Signals, the group or whatever. It's very public. Invite all your people there. Anybody you want to learn, just invite them in that. And we're going to put our articles from our blog, the blogs on the website. We're going to, 1 out of every 5 trades we're going to put out there just so people can see how it works. In theory, those trades should still inherently be profitable in the long run, but it would really take a significantly long time because we're only going to put 1 out of every 5. But then for people that are curious as to, we're doing it anyways. We have a Twitter feed as well. The other one is a secret group, okay? It's members only. Members only then is where, it's just for us, just for us to talk and hash out where we need to hash out, put signals in there to whatever the case might be. I mean, ideally, I want the signals in the secret group, the SMS to everybody, and then as well the option to look at it on the back end, within your back office from there. What else? I think that's about. Yeah, every 5th. Okay, yeah, that's what I'm saying. Every 5th trade is free. Any other questions at all? Going once, going twice. All right. So make sure you friend me so I can get you guys into the group. You can probably just search for $10 Signals. Dwight, I think we have actually on the website too, so you can just link yourself to that one. If you're getting any SMSs, let us know. We're infant with this stuff. I don't know. Like, I let my partner take care of all that website stuff, and I probably annoy him to death because I'm like, hey, can you move this picture over there or whatever the case may be. So there's probably a lot more behind the scenes than I even know. What there is. As a result, here's what I do probably know, that there's going to be hiccups along the way, technical hiccups while we're making this all work. So if something ain't right, like if you don't get a commission payout, if you just come to me directly, we're still small enough that you guys can have my cell phone number. Here, I'll just give it to you. Here's my number, 444. Don't be publicizing this, please. Please. At some point, I'll probably generate like an 800 number, but that's my number. You can call, you can text me, you can Facebook message me. Because of my career, I'm very flexible. I can pretty much take calls like any time of the day. I don't do a 9 to 5. Worked from home all day today, so I'm very flexible with a lot of this. Now, and if I'm not, then I will schedule a time. If I'm not or whatever, I'll you need to schedule a time, and then if it's a webinar, or you want me to individually show you how to do it, I mean, I have no issue doing that stuff. Unless it gets out of hand, I can't do like 100, there's only requests out of that. So at some point, I'm gonna have to limit my time to whatever. But for now, I'm fine for that. So if there's no other questions, I'm gonna end the call. Thanks for taking time out of your day to swing by this. If again any other questions, give me a call. I'll see you guys next week, and let's try to make some money this week if you guys are okay for that. All right? Take care.